Hi, everybody. This is George Foshin, call Realty Best Palos Verdes Homes, with the latest update on how COVID-19 is affecting Palos Verdes and Beach Cities real estate. And wow, there were some wild swings in the last couple of weeks that I think are tremendously interesting. So let's get right to it. First things first, to view all my past recordings, and this is going to be the I think 20th week. Every week I do an update on this. So just subscribe to my YouTube channel. Go to youtube.com/homeispv and click the subscribe channel. You can watch the other past videos to kind of see where we've been going. Um, as always, we're going to concentrate just on the facts. I'm not going to speculate or provide opinion, just the numbers here today. All right, so how have the numbers changed? Well, if we look at July 9th, 2019 through August 8th, and the same time period for 2020, we see sales up 29%, almost 30%. When we first started doing these recordings in that's not correct. In mid-March, after Newsom shut down the economy here in California, sale volume was down almost 50%. So some amazing changes there. Next chart, prices in the same period of time, in that 30-day period of time, 1 year apart, prices are up about a little over 13%. This is for single-family residences in the Palos Verdes areas, beach cities, and South and West Torrance. So basically, coastal California, South Base, coastal California. And next, on a dollar per square foot basis, prices are up 2.47%. Now, again, this has been the case for the last couple or 3 weeks. When I first started these recordings, these videos, prices were actually down somewhat, anywhere from 3 to 10% or so. So some pretty interesting recovery there. If we look at the ratio of changes in supply and demand, it's really interesting. You can see that in the period of time from March 9th through August 8th, that 5-month period of time, there were less pending sales than new listings, demand, supply, and in the last week, more pending sales than new listings, so demand exceeded supply. Well, I was almost going to give an opinion, so I just caught myself. All right, so we can see that in terms of what that ratio means of demand to supply in the last week. Excuse me, the blue chart, 142%. Now that'll be significant in another slide, so keep that in mind. And let's see, I think we're going to get to that right now. Look at that. Look at that. This is when we first started recording. The ratio of demand to supply, 53%. And it's, nothing goes straight up, straight down. It's the market kind of breathes. It's a living thing. But generally, the trend has been up. There have been a couple of times where the numbers got down low, but like last week, look at this wild swing from 68% to 142%. Again, this is the number of properties put into escrow divided by the number of new listings supply. So just incredible. Generally speaking, through COVID, the market has been improving as defined by economic demand and supply trends. So make of that what you will. Those are the facts. And last thing here today, make sure you make use of the searchhomesinprivate.com site. I created this site to, I'm just a little guy, okay? I'm just one agent fighting against the big portals. I just cannot fathom why people will continue to use sites like Zillow and Realtor.com when your private information is sold to multiple real estate agents and multiple advertisers on their platform. For example, Zillow, and you've heard me say this before if you've been watching these videos, Zillow in their last fiscal year made $1 billion doing that to you if you were on Zillow. So, pay them they may be free, may not charge you anything. I don't either. But, like Milton Friedman said, there's no such thing as a free lunch. And you may want to check this out too. All right. So that's it. Thank you very much. Stay tuned next week. We'll see how the numbers look then. Bye for now.